Hello, and welcome to FinInvest Niger. My name is Tom Princeville. I'm a certified securities and investment specialist, and I've been investing for the past 2 decades. In the course of this video, I would like to present a fundamental analysis of Consolidated Hallmark PLC. This particular company is in the insurance sector of the Nigerian Stock Exchange. So we want to determine precisely the company's suitability or not for your investment portfolio. So generally, before you embark on any investment activities in the stock market, you are expected to carry out either a technical analysis if you are a trader, or a fundamental analysis if you are a fundamental value investor. So in this case, we want to analyze this company based on its fundamentals as indicated in on the table here. Let's start with the company's revenue. So this company made a return, or rather made a sales of 43.449 billion naira, 43.449 billion naira in the full year 2025, as against 29.428 billion naira in the full year 2024. So you could discover that you could observe that there was a climb in revenue from approximately 29 billion naira to 43 billion naira, and that's an increase of about 4 billion naira. That's quite commendable for this company, Consolidated Hallmark PLC. We also want to highlight the company's gross profit. The gross profit figure here, is 9.778 billion naira, 9.778 billion naira, as against 23.330 billion naira in the year 2024. This is where, things becomes a little bit dicey, because you could observe, a decrease in the gross profits here from approximately 23 billion to approximately 10 billion naira. That's a decline of about 13 billion naira. You could observe it here from 23 billion to approximately 10 billion. That's about 13 billion naira in a decline in the company's gross profit. We want to move down to the profit before tax. For the profit before tax, the company recorded 23.330 billion naira, 23.330 billion naira in the full year 2024, as against 9.701 billion naira in the year 2025. There's also, a decline of about 13 billion naira in this parameter. We want to move down to the profit after tax. The company's profit after tax here is 22.590 billion naira in the year 2024, as against 8.221 billion naira in the year 2025. So you could observe the difference here. This is about 23,000. This is about 8,000. So there's a tremendous drop, in this particular value, from 23 to as low as 8 billion naira. That's where the company recorded, a somewhat discouraging figure. Profit after tax here is relatively discouraging compared to other more profitable companies in the insurance sectors. So we move down to the total comprehensive income. The total comprehensive income, the company generated 22.590 billion naira, as against 8.221 billion naira in the year 2025. So because of the overall decline in the profits level, it translated to a decline in the earnings per share. And mind you that the earnings per share actually is the most important value, the most important parameter, the most important figure when it comes to fundamental analysis of a company. It is the number one figure because it is what determines the company's future share price, increase or decrease, and that's what equally governs the company's dividend payouts, as the case may be. So in this case, there was a decline of the figure here for 2024 was 2 naira 84 kobo. 2 naira 84 kobo, it declined to as little as 76 kobo. All right, from 2 naira 84 kobo to 76 kobo. This is a decline of over 2 naira. So it's a very steep, serious looking decline. All right, which of course is somewhat discouraging for this particular company. So we are through with the profit and loss segment of our analysis. We now want to go into the cash flow statement as well as the balance sheet. So this portion of the analysis represents represents the cash flow statement in skeletal, bare bones, summarized version, as well as the company's balance sheet. So we'll start with the company's price here. The share price is 4 naira 96 kobo, 4 naira 96 kobo, and the company shares outstanding is 10.84 billion naira. And so you arrive at a market capitalization of 53.77 billion. 53.77 billion. And how do you obtain this particular value? Is by simply multiplying the share price by the shares outstanding. That will give you the market capitalization. And so this market cap here tells you, how big or how small the company is compared to other companies in the exchange or compared to other companies in the same insurance sector. And the company is fairly big. All right, though not as big as companies like Bua Food with market cap in the trillions. All right, and so the matter is that the companies are fairly big, and not only that, it means that if you have this particular amount of money, if you have 54 billion naira, you could buy the whole company. That's the meaning of this particular value. We now move down to the company's PE ratio. The PE ratio essentially means the ratio of the company share price to the earnings per share. Okay, if you divide 4 naira 96 kobo by 76 kobo, you are going to arrive at 6.53. And what the essence of this particular figure is telling you how expensive or how cheap the company is in relation to other companies in the same sector, in the same insurance sector. So in this case, the essence of this particular figure is to tell you, whether the company is cheap or whether it's expensive. Based on this particular yardstick, is indicating that you are paying 6 naira 53 kobo for every 1 naira unit of earnings in this company. That is, you are buying something worth 1 naira, all right, for 6 naira 53 kobo. That's what this value stands for. Okay, so it isn't all that expensive actually. Now you go to the company's equity. Equity simply means the difference between the company's total assets minus its total liabilities. When you subtract those two items, you are going to arrive at 41.573 billion naira. As the company still maintains a positive equity, which shows how strong the balance sheet is. Okay, and not only that, we want to also look at the cash position. The company has a cash in the bank and cash at hand of 7.956 billion naira. 7.956 billion naira is quite commendable because the company generated a profit of 8 billion, and then we are having almost like 8 billion naira in cash position. Some companies may generate a profit, but you will not see an equivalent amount in this cash position. Some companies even have negative cash flow. All right. So in this case, the cash flow is quite robust. There's an excellent cash management, as you could observe, and so all things being equal, the company is actually doing very well. But the only problem is just that is this decline in earning per shares as a result of the decline in the before and after tax before and after after tax profits. That's the problem with this particular company. So all other parameters are okay. All right. So although this particular presentation is academic in nature and then it's for entertainment purpose, but all the same, I would then conclude by saying that if you have interest in this company, all right, okay, you shouldn't buy now. You shouldn't buy until when there's an improvement in the earnings per share here. Once you observe that the earning per share, has kind of started going up, started climbing in the subsequent quarters. All right, if it climbs maybe 8 kobo, maybe 80 kobo, 90 kobo, 1 naira plus. Okay. So once you start climbing, all right, you could buy at that juncture. But for now, I wouldn't advise you buy into this company. Just wait. If you're interested, when there's an improvement in the earnings per share, which indicates that there's improvement in the total profit level, that's the right time for you to buy into this company. But for now, just wait and be patient. Please subscribe to this channel and like this video and help me share this video to people in your community, because my heart desire essentially is to reach out to at least 1 million Nigerians with the inherent wealth creation potentials in the Nigerian Stock Exchange. And if you are very serious about investing and you need a kind of assistance, all right, a kind of guidance, hand holding, I think I'm available to do it for you. Just contact me and I will help rebalance and manage your portfolio for you as the case may be. So thank you very much for watching.